Hey, I'm Matt Hudgens and he's Dave Mulvaney, and this is Profitability MD. Dave, how you doing today, buddy?
Doing great, Matt. Sun's out. I'm doing great.
This is good. All right, episode 159, and I'm very excited today. We have a great guest, Vinney Chopra. And so go ahead and you do the intro here, Dave, and then we'll get Vinney to start talking.
Well, it's good to have you, Vinney, and I'm excited to have you on the show. So Vinney Smile Chopra, his middle initial is, or his middle name is Smile. It's not his real middle name, but he's always smiling. He's a real estate investor, syndicator, international best-selling author of 2 books. He hosts 3 podcasts. He's a multifamily investor, educator, principal syndicator, and mentor. He's actually my mentor in multifamily real estate. He's a dedicated husband of 40 years, father of 2 children, Neil and Monica, and he lives in Danville, California for 40 years, which is really right near San Francisco. And he came to this country with $7 in his pocket.
Oh, and I love it.
And a big dream. And now he has a portfolio of over 6,500 units, amounting to just over 650 million in multifamily, senior assisted living, and hospitality arenas. And his passion is really around helping others achieve financial freedom. And currently he's focusing on giving back to seniors through his assisted living and memory care facilities. Vinney, that is an unbelievable bio. I'm so glad to have you on the show.
Oh, thank you. Thank you, Dave. Thank you, Matthew. I really appreciate you guys. And I hope I can bring some value to your audiences. Yes.
Well, our focus is always on what we call the 4 pillars of wealth, which is really owning a business, then investing in real estate, maximizing your retirement funds, and then purchasing cash flowing assets and wealth accumulation. And we call those the 4 pillars, and they're in every business. So, Vinney, did I miss anything there in your bio?
No. You said it all right. I'm a mechanical engineer from India originally and did my bachelor's over there. I came to this country to do my MBA in marketing, and with $7 and a dream to work hard in this land of opportunity. And lo and behold, what happened was when I went to George Washington University, my friend was saying, Vinney, what are you doing for summer? I said, I don't know. I had just come from India, thick accent, people can't understand me. He says, I sold books door to door. Would you like to come with me? And I said, okay, alrighty, and lo and behold, that's what happened. I sold books for like 80 hours a week. You have to work, not 40, but 80 with this company. And they gave me exposure to a lot of positive books and things like that. I kind of liked it. So I started liking sales and marketing more than engineering and put the engineering in a box.
So was that when you first figured out that you were an entrepreneur, when you started selling books? What type of books? I want you to tell what type of books you sold.
Oh my gosh, this is a very good company, by the way. I'd love to say the name of them. It's southwestern.com. Southwestern, they started in 1855. Lots of very, very creative CEOs and other people have gone through these book sales for such a long time. It's still in business. And when I started with them, there were 2 companies only. And I think now they have 28 companies. It's a privately held company, Yeah. So you're right. These were Bible books. What? And a Hindu coming from India selling Bibles.
Yeah, exactly.
And encyclopedias, educational books, a cookbook, and Wonder World book, I think, for children. So we had all shebang of things. And I liked it so much, 3 months that I did, Dave and Matt, I came back the next summer, brought some more students from George Washington. And then I did 3rd summer again when I graduated from George Washington. So I did it for 3 summers, 80 hours a week for 3 months or so, every single time. Got my tough-minded businessman award, I think. And I want to win medals and all the good stuff. I have them. By the way, maybe one of these days I should pull them out and show to everybody my certificates, my prized possessions, which started 40 years back.
You started working hard right out of the gate, is what it sounds like.
Yeah, when you burn the bridges, right? You say no going back, right? My
Right,
parents didn't want me to come. They said, this boy is gone if he leaves India. They were right, but I was a good boy. I was helping my family all the way through, and so forth. Whatever I earn here, I'll send back to India after, keeping some money and all that. But overall, now we are very happy. My sisters are here, two sisters. My two sisters are back in India, and then brother, all that.
So what, Vinney, you've been self-employed for many years. How many years? I know you've been at least 14 years in syndication. But how many years have you been self-employed?
Oh my gosh, for 44 years.
Okay.
Literally, since I've come to this United States, I ran my own business in the book sales. That's what they called it.
Right.
And we had to pay our own way to get trained. And we had to pay our rents and everything. It came from the deposits that I got for selling the books. We will collect 40% deposit or 30% deposit. And then at the end of the summer, this company, they run you very tight, and then you get a check as a profit check. So you have revenues, you have expenses. I learned it pretty quickly, how to save money and
Yes.
all those things and so forth, So I think I saved $3,100. My first summer, it went to 7,900, then it went to 12,000.
Wow.
In my third summer.
Yeah, that's fantastic just for one summer, especially back then. That's amazing.
Back then, and then I started promotional consultant job, 10,000 a year, draw against commission.
Okay.
Oh my gosh. So it was not a given salary. It was, you got to produce. They just give you the money up front, but then you have to produce,
Yeah, most of self-employment is about producing.
It's like
right?
that.
So-
Totally.
So tell me, as you made this, what made you transition from like regular business? What made you start investing in real estate? Let's start there.
It's so interesting. I got married 42 years back, and my company president invited me to a meeting, and we were young, right? I was very young. And he says, Vinney, we are looking into expanding on the West Coast, our company, in this promotional consulting, fundraising, and all that. I said, oh, all right, let's do it. But they said, California, San Francisco, and I was back in Ohio. I said, California, where?
Right.
So anyway, so we moved here. My peer group, the friends I made, they were in real estate, Dave and Matt. So the peer group piques your, interest.
Yes.
And then I had a broker friend, who was selling residential, and he shared with me how he bought a home in the Central Valley for only $65,500 and only $10,000 down or something. And we bought it too. He bought 4 maybe or 3. We bought only 1.
Okay.
And that house became $320,000 from 65 to 325. And that's how we got into, real estate. We took a loan on it, pulled out 290,000, I think, or something at a very low percent. And then we went to Arizona, bought 3 homes over there with that money. So this started going for us 35 years back, 35 to 38 years back. Yeah.
Wow.
Go ahead, man, if you have any questions.
No, I was just going to say, I think that's great. So we always say you're the product of the 5 people you hang out with.
Yeah.
Sounds like you were hanging out with some real estate guys there in California, and that's kind of what got you into the real estate market.
Yes.
And then you experienced some success, so you just built upon that. One house.
Yeah, right. We
more
were
in Arizona.
just so fired up. My wife and I, we are very frugal people. So we will save money, and then buy more properties in Georgia and Texas. And then we bought 1 acre land with 4 homes in Bakersfield, California. We were going to move those homes and build 34-unit apartment complex there.
Holy smokes.
Then we also developed custom family home, from scratch with my another partner who is in construction in Shafter, and sold it to a doctor. So we've been all around, buying and selling and all. Then, of course, I invested into a multifamily 165 unit as a LP partner, limited partner, in Reno, Nevada, California or Nevada. Yeah, California. I think side it was. So all that. But then the lights just went off. 2005, let's say, 4 or 5, I became a broker.
Okay.
My wife said, you have so much knowledge, Vinney, and everything. You should go for an exam straight. Back then, you didn't have to be a salesperson at all. So I learned the things in 3-4 months through an online course. I gave broker exam, passed it in one try.
That's good.
So I'm an active broker still. I am. Even though I don't buy or sell, but I can talk to brokers in a good language and everything. And then I never take split commissions, never. Because I just thought 14, 15 years back, if I can give my commission to the listing broker and they're making double the money, my portion and their portion, they will give me more off-market deals.
Oh, I like that. That's really smart. Yeah.
And it worked,
Yes.
So lots of deals came on I've done 36, 37 syndications so far now,
And so I don't know if people
Wait. Hold on. That's your irresistible offer, Vinney. Dave and I would call that your irresistible offer was bring me the deal and double your commission. That was your irresistible offer. That's awesome.
Thank you.
Yeah, and that is,
I really believe that too. And I would not talk to buyers brokers, to be truthful, because I didn't want to waste their time. And I'll be very open and frank with them. Hey, you know what? Actually, I really work with listing brokers, because that way, in my thinking, I'm a logical mind. I didn't really, use my engineering, but to become a logical person. Right. So I felt the seller is here and the listing broker is here. There is no vacuum. Right. But then if you get a buyer broker this far away, and if I'm on this side, there is a lot of gap in between the two.
Yes.
And I said, why don't I deal with the person, listing broker, because he understands the seller and why they're selling and what their ins and outs are, what's the bottom line pricing that they can need to get, all that stuff. That helped me a lot.
That's your target market. So you and I would go in, your target market was you were just dealing with listing brokers. Then you had an irresistible offer, which was double your commission, because you can have mine part 2. Listen, you're a genius, Vinney. I love it.
No.
So one of the questions that I'm sure anybody watching this, so you're author of Apartment Syndication Made Easy. Okay.
Made Easy. Yep.
It's an international best-selling book.
Oh,
I happen to have it.
Good.
Yes, I love it.
Tell us, if you wouldn't mind. Okay, you were doing single-family homes, and then you wanted to make this jump to multifamily. And that's Positivity Brings.
Yeah, Positivity Brings Profitability. And I launched it. Actually, I just added more chapters to it. My editor just provided us. So now we'll be able to double the size almost of this book also. And then our third book is coming out, which is on senior living investing made easy. So that's the other one, which is very, very exciting. As I'll be 70 years old, not young. I shouldn't say old at all. I never say that. This August, I'll be 70. So I really believe, I think it's mindset, how to stimulate your mind on a daily basis to make a good use of your time.
Yes.
So I want to be sitting here when I'm 100 years of age. I don't know how many freckles I'll have, but with Botox and everything, anything is possible.
Fix you right up. Keep that smile going, Vinney. We can keep that going permanently.
Yeah. So tell us this transition from single family to multifamily. How did you make that transition? And maybe tell us a couple obstacles that you overcame making that transition, because it's got to be a hard transition.
Very hard, very, very hard. two things were the biggest obstacle. I didn't know nothing about multifamily. I only knew how to buy single family homes, contract, you get a loan and you're done, right?
Right.
And have property management companies managing it. But when I got into multifamily, I said, oh my gosh, there are so many things. I didn't know what letter of intent was, or cap rate was, or all those DSCR, all those ratios. So I said to myself, who is number one? This is 2005 now. Who's number one in USA that can teach me how to become a great, multifamily purchaser or investor, let's say, right? So I came across a gentleman who still is very strong and everything. And, so I paid $34,000. This is 2006, I think now, 6 or 7. And I even took my team with me too. So total, I paid over $100,000 to learn this business.
Yes.
And that's what I tell, a lot of people who, like to watch things and so on internet and, try to, but the biggest thing is analysis paralysis and the fear. Those were the two factors. And the third factor was money, scarcity of money. Because, when you want to buy apartments, bigger size, you need more down payment. Right.
Right.
So that's when I said, you know what, I need to figure out a way how to pool money together. So that's the key. My success where I am today is because of syndication.
Okay.
Using other people's money, in a legal way, right? To buy larger units. My first, unit I bought was a duplex, which we still own it in Odessa, Texas. We get $2,400 a month from there. I paid the mortgage, but then my first unit was 14 units for $180,000.
Wow.
And it took us 10 months to get it, 10 months.
Wow.
With the coaching and everything going on and and we looked at so many deals, but nothing panned out. And then this 14 plex we bought, and then 109 units. It happened to be, we were working simultaneously. So same week on Monday, my team and I closed on 14 units. On Friday of that month, of that week, we closed on 109 units. So there were two, and it was seller financing, by the way. Nobody will give me loan. They said, Vinney, you live in Bay Area near San Francisco, properties in Odessa, Texas. We don't want to give you loan because you have to be 15 miles away from the property. Live there. There were so many stipulations.
Yeah.
Oh my gosh. So we had seller financing done on that one. We paid 40% down. What?
Wow.
Not 20, not 30.
Yeah.
The seller won't even talk to us. You say, you're going to run my property to the ground and then I'll have to come and foreclose on you. So I want 40% stake, down. Yeah.
So it's funny, at 14 units for 180,000, you can't even get one unit for 180,000 now.
Nothing.
Everything's over 200,000 a unit these days. But so the 109 units, that's a big purchase for your second purchase.
It's a big purchase, but at that time, I only paid $2.4 million for it in Odessa, Texas, which is out of boonies, as you know. It's the oil country there. It's a blue-collar town. Midland, Texas is Twin City there, and that's a white-collar town, actually. So this one was $2.4 million for 109 units plus 101 storage units. On the same lot and a commercial building.
Oh, wow. Okay.
I lucked out. And the seller was from Bakersfield, California, I found out. And his son was managing it.
Okay. Well, I was going to say, so how do you manage when you're in California and it's in Texas? Like, let's talk about that. Like, that must be a fear.
Essentially, what happened was that we were able to hire a company from Dallas who had a representation in Odessa, Texas. So they managed it for us.
Perfect.
Perfect. And then about a year and a half or so, because we kept on buying, I bought 6 properties, I think, in Odessa and Midland. And then its portfolio got bigger and bigger. Then we went to Austin, San Marcos, went to San Antonio, Seguin, And that's when my property management company was born.
Okay.
So
Okay.
actually we started vertically integrating, and then, from 5 team members, we don't say employees, and all the way to 135 full-time, team members were working for my Monil management group. Yeah.
Wow.
Monil management. Yeah.
Fantastic. Well, again, you're solving your own problem. That's what we would talk, right? So originally you were farming out the property management, and eventually you got big enough where you could afford to hire your own full-time
Yes.
property managers. Again, solving your own problem is what we call that.
Totally,
Yeah,
totally. And,
yeah.
of course, it kept on increasing. My accounting department went from 1 to 2 to 3 to 5 full-time people,
Right.
my HR and all that. Then, of course, asset managers and regional managers, senior regional managers. I mean, all that. So I've gone through the whole shebang.
Yeah, yeah.
So how do you feel about let's talk about, because you make it sound so easy. Tell us about one of the worst real estate deals that you've had. Maybe one that you lost a lot of sleep over at the time, and you were glad
Oh
to
my
finally
God.
get rid of it. Let's hear about one of the
Lots of them. I mean, we could talk about COVID, what we went through, delinquencies and moratoriums. There are so many, hardships we went through. Like I sold my property in Atlanta. It came out all right. I gave really good money. I paid 12 million too. I sold it for 18 million something within only 2 years, 2.5, 3 years, let's say, because 2017 I bought, 2021 I sold, right?
Okay,
So
right.
4 years, let's say. But then let's go back to the earlier years. There is a place in San Antonio, Alamo Heights.
Okay.
Alamo Heights is the most luxurious and very A-class area. We always were taught, let's buy C asset in A class, right?
Okay.
So that's what we went to for it. So we bought this property, 72 units, and everything looked great. It had a chiller system. I hate chiller systems. I can tell you that. But what happened was, when we bought the property, the investors were a group of attorneys. Wow.
Okay.
All friends. And they raised about $1 million or so. We were able to raise, but we found out after about 2-3 months, there was some smell coming out around the buildings. And that was the sewer pipes had busted underneath in the foundation. And then, as it busts, then sewer is all over. Right. Then it starts seeping through and smelling and all that. Anyway, we got the insurance involved and everything. But we told our investors, after giving them maybe 1 quarter or 2 quarters of cash flow, that now we have to fix this challenge we got. So that was just one of them. They were very nice to us. We'll meet them every 2 weeks, give them progress. They were attorneys, by the way, they could have said, hey, we don't want to. So they saw the trust and the confidence in our full due diligence to do it right, and we did sell them, gave them 8.5%, I think, per year. They ended up making,
Good.
So
Yeah.
not too bad. End of the story. But the thing is, there are so many challenges, Dave. I mean, I'm telling you, brother. I mean, cyber security hacking on my company, where got my address and my picture and everything sent to my investors to wire the money to Africa or something.
Oh no.
I mean, all that has happened. I made it good for my investors. I paid $50,000 to one investor, my own money. I paid another $8,000 to another one. Then I paid for one of the vendor. It was $109,000 bill that got wired to send to Africa. So I was, as a CEO, you always want to say, okay, what's the right thing to do?
Right.
So I approached the owners of these vendors and said, I need your help. I really need your help as a business to business person. I'm sure there is a profitability section in every bid, every invoice. could you give me 35% off or 40%? And I'm willing to settle the, bill because I already paid it. And they were very kind. I'm so glad. I think people do like to see your genuineness and say, you know what, let me work with you. Let me do it.
Right.
So I was able to pay the bills rather than them not getting paid, but they took out their profits and things like that. Those were some hardships. Construction people, I've been when you manage so many assets, so many CapEx things are going on, so many vendors are being involved. So, as we were doing 16-unit burnt unit I bought, that was a success story, big one. Sienna Villas in Freeport, Texas, 3.550 I bought, 140 units operating, but 16 more units, a whole building burned down.
Oh.
So it was 156 units, but they gave me very cheap, 3.550. I sold it for 8.7 million, by the way, after that. But I got that building put back together. Actually, even the broker wouldn't go in. I still have maybe footage somewhere. I put a hard hat on and my cell phone with the lights, and I go into this burned building underneath.
Doing your own inspection. How do you, when you've got, you're telling us some great, horror stories, how do you have the confidence to keep going? And what would you tell somebody who wanted to get involved in real estate, that there are hardships, but you need to do it anyway?
I'm so glad you're saying that, Matt. The key thing is, you are, as a syndicator, you have fiduciary responsibility to make the decisions on a daily basis to safeguard the capital of your investors. That's number one. Secondly, preservation of capital is called. Then cash flow from the operation and the value add and everything. And the third thing is the return of their capital when we sell, and then equity gain, right? So those are 3-4 items. And luckily, when I got started, we started in 2007-8, let's say, starting to buy. It was a slump. I mean, market crashed and everything. So it has been a pretty strong, but not only that, I have done really well later years in my life. Like I just bought a deal over there in Austin, Texas for 35 million in COVID. That's 2020, September of 2020. And I paid 34,750,000, I think, something like that. Broker tells me it's worth 60 million now. What? Oh my gosh, out of my comprehension, So we are thinking our investors are going to be totally jazzed up, because they're going to get great returns. So I've done pretty okay, even with the hardships. If you do the decision making correctly and you're putting in, I've never done a cash call in my case. So, I just have always figured out, okay, if I give a loan, and I've given loans, short-term loans at no interest to the LLCs. My wife and I always have felt, let's just give a little bit of our portion to the investors. So in some quarters, we won't take anything and give all the money to the investors, But then investors see you, who you are, and they want to tell more people about it, right? So I started with one investor. We have 430 investors now.
Really? Wow.
Oh, yeah. And then our top investors have given us close to 4 to 5 million. Wow. They started with $100,000.
Right.
But then they went to 250 and 500 and more syndications I kept on bringing. They kept on jumping in there with their retirement funds. And then I returned money back. They brought it back. So my big thing is I have been giving and doing these quarterly meetings on Zoom. And I invite all my investors of that asset, and I bring the asset to them. So I'll ask the community manager to send me new pictures of the CapEx and their picture of the staff. And when I travel, I take a lot of videos and pictures. So my quarterly meetings will show them, this is where your money is being spent. These are the P&Ls, these are the rent rolls, and I'll take the snippets from the rent roll, rent manager software, with the date and time and everything so that they could see the authenticity of these numbers.
Right. Right.
And the investors like that, they see that. And then I knew that they're going to watch it again, or those who didn't come to the investors meeting, because we'll send them next day the whole recording, right?
Right.
Always. And they're going to see towards the end anyway. So I was trying to put my next deal at the end of my quarterly meetings, this Zoom meetings, right?
Right.
So that's how I kept on doing syndications, like so many of them. And I think, if I may think about it, out of my 400 investors, maybe 10 have gone to the assets that they have invested in.
Okay.
Only 10. Yeah.
Wow.
So that takes a lot of trust. Absolutely. So we've covered a lot of ground, and we're coming up on 30 minutes. Vinney, what's outside of your real estate investing business? Do you do anything else to build wealth? I mean,
I'm so glad you said it. And by the way, we are good until 2, I just found out. So it's no problem. But let's talk about it. Yeah, I am into the seed round of an IT company also, which is my very good friend partner who also loves hotels. We bought the hotel Hilton Garden Inn together, and we sold it, by the way. We just bought it December of 31st of 2019. COVID hit and everything, but luckily the medical staff chose our Hilton Garden Inn to live in this town. We just sold it 3, 4, 5 weeks back for $11,850,000. That's the price. So not bad, doubled. So I invest in that. Then I am also into medical tech, some funds, like it's got, I believe in cutting edge medicine. So I've invested in those. I've invested in mobile home parks, limited partners. Some of my students have really graduated and they have opened up things. So I've invested in those. I've invested in ATM machines where I get paid I think 12% a month for 7 years in a row. So I have invested money in there. And these startups, I think so. My money will be worth 20 times to 30 times X, So I am, and stock market, I'm big on stock market. I was just looking at it. I have Robinhood account, good to see that it's just gone up today. Almost 79,000 today. It's gone up,
Right.
So yeah.
That's great. Matt, you got any questions you want to ask before we start to close out?
No, yeah. Well, I'm going to go a little bit down the rabbit hole in that, tell people how great real estate is with like the tax advantages, right? So you get this depreciation plus the cash flow. So it's like you're not paying tax on the cash flow. Can you explain that a little bit about?
I would love to, Matt. That's huge. Because see, most of the real estate is bought in an LLC.
Okay.
In an LLC, it's a pass-through entity. Okay. So that means the LLC doesn't pay taxes at all, but then a CPA is able to work and look at the profitability of the LLC. Right. And we say, this is the revenue, these are the expenses, and these are the net income cash flow after paying the mortgage and everything and all. We give that as cash flows to the investors. Right. So they are making money every quarter or every month, however they get their cash flow. But there is one line in tax return, which is depreciation line.
Yes.
So when the CPA does the tax return, they look at everything making positive, but then they put depreciation. It could be straight line for residential or multifamily. It's 27.5 years depreciation, amortization, we call it, because you take the structure, not the land. Land doesn't depreciate. Structure divided by 27.5, or better yet, you do cost segregation.
Yes.
It's called accelerated depreciation. And that is the beauty of it, because then certain parts of the structure depreciate faster, like in 5 years or 7.5 years or 15 years. Right. But with bonus depreciation going on now, which is it's going to phase out in 2026, I think, or something. But still, it's pretty darn good. the profitability of the whole LLC gets negative when you deduct $2 million in that.
And the
Now
depreciation.
that loss, 70% is given to the investors and 30% given to the general partners, in a syndication world.
Okay.
In REITs, you can't enjoy that at all because REITs is going to give you whatever percentage and all that. But, I don't know if they do K1s. I don't think they do K1s. No, but in private syndications, that's the advantage that our, investors, doctors, attorneys, lawyers, W-2 people can get cash flow,
Right.
but they won't have to pay tax because it's a negative.
Because of the
and they can even
depreciation.
back it against their other passive incomes.
Yes.
But
That's
if their
awesome.
spouse becomes a real estate professional with 750 hours and recording and all that, I'm not a CPA, but then for their whole income, joint filing, they could be determined because of the spouse as a real estate professional tax filing. Now their active income and passive income is same. So that is the beauty of real estate. It's so humongous. And then you could do 1031s. See, that's the other beauty of it. So you don't take the gain and pay capital gain of 20% or whatever, long-term capital gain, but you could invest that extra money and the gain into the next deal and the next deal. And if, from what I've heard from the attorneys and from the CPAs, if you keep on doing it till you die, then it just goes away.
Yeah.
Then
Then you get the step up basis. That's right. That's awesome. So that's exactly what I wanted to hear. It's the tax benefits of real estate are fantastic, and not everybody understands that. So these limited partners are investing in your deals and receiving a cash flow, but a lot of times that cash flow is coming to them tax-free.
Correct.
Tax
so
reduced.
true. So true. And even the equity gain too, because they can keep on accumulating this negative, we call unaccounted, no, what is it? Accumulated negative losses. Their CPA can keep on accumulating every year.
Right.
And then when we have a gain, a phantom gain of the equity, when it's sold, it can bat against it.
Yes.
So it's a best of the best deals, because in stock market, if you lose 100,000, you can only deduct 3,000, I think, per year.
That's right. That's right.
So it's such a thing. And the other good part in real estate, it's a leverage. So if somebody's putting 100,000, they are actually becoming a partner in the business for 300,000 or 400,000, because if it's a 75% leverage and 25% is the down payment, so their 100,000 became 400,000 already in the buying of the product. As compared to stock market, if I want to buy Google stock, I need to give real money. The bank is not going to loan me money, not at all.
Correct. That's exactly right.
So
The leverage of real estate
being a tangible asset, banks and institutions and Fannie Mae, Freddie Mac, they love it. It's tangible. It's something way different than stock market and crypto and everything. And then they want to be partner with you. Like the loan I got for the Austin deal, I got $22 million or $23 million loan, 2.69%.
That's ridiculous.
It's ridiculous. And Freddie Mac, I think, gave me that loan, and they don't want any portion of my cash flow.
Right.
And they don't want any portion of that 35 to 60 million. How much is that? 25 million gain or whatever it will be, right? Minus commissions and all that. They don't want any portion of that. No. That's all mine and my investors. So real estate is the best of the best thing in USA. All over the world, actually.
It is the best. So as let me just ask you this, out of interest rates, starting to bump up a little bit at a time, right?
Mm-hmm.
And the real estate market. So you have the naysayers who say, oh, I'm scared of rising interest rates and I'm scared of real estate. I'm sure there's still opportunities. Like, so what do you say when you go through rough,
I'm so glad. No, very good point. Very good point, Matt. I would say that you got to play the ball. The thing is, you cannot be outside as a spectator and then you say, okay, a broker is going to call me and give me this deal. and
Right.
say, hey, Mr. Chopra, come on in. It's a good one. That doesn't happen. So you are right. There is some upward pressure with inflation being at 6.5% or 7% and so on, that the interest rates might hike up 0.25, but it's been so low. Oh my gosh.
Right.
I mean, I bought properties at 7%, 8%, 9%, and people are doing a lot of bridge loans right now and all that. I would like to really tell them, the thing is, be conservative, definitely, but be in the ball game, because you can only play ball if you're in the field. The other thing is, make assumptions to really conservative assumptions, in underwriting. That's the second thing, where you don't want to say, okay, my rent is going to increase this much, but just say it's going to increase this much, and then figure out if the numbers make sense, right? The value add really brings the best of the best things for starting out investors, because right now with the cap rate compression, the C class, the B class, and A class compression, capitalization rates, cap rates are very close together, literally.
Right.
I mean, the sellers are saying, hey, my property is worth a lot more.
Right.
So you have to be careful on that, but don't think about it. See, I just did a seminar this week about 3 tsunamis going through in this country.
Okay.
3 big tsunamis. One is the millennials.
Okay.
I mean, 74 million of millennials, the Z population and all, they love portability. They don't like to own. They have seen what happened in COVID with the jobs. They could work from their office and home and so on. So there is a huge need for rental units, one. Secondly, immigration. I mean, in USA, immigration of 1.5 million or around there every year is what is saving us, because the birth rate is very low, and attrition and dying and everything. So I just read the statistics. We are 357 million, will be 441 million. What? United States population in 2065. So almost 30 years, 40 years or something from now, it'll be 441. And 100 million will be seniors. What? 100 million. And almost out of that, about 60 million will be in the 80 plus range or something, some ungodly numbers. So I think there is so much demand for residential, I should say, I don't know about the strip shopping centers, their downward trend, hospitality, and then industrial, definitely big demand, as storage units, big demand again, all that stuff.
That's good. That's really good.
All right. So Vinney, you've got a book out that you've got a free book they can get access to. Where can they get the book?
Oh my gosh, this has been an international top seller, over 500 great reviews all over the world and all. But we want to give everybody watching us or listening to us to get this book for free. All you have to do is just go on my website, which is Vinney Chopra. So www.Vinney Chopra, like V as in Victor, INNEY, VinneyChopra.com. There it is. Smile. Don't put smile. VinneyChopra.com and /free book. Just put / and then free book. You'll come to a landing page, and then you could just get download a copy right away. And please look at it and listen and watch. Oh, by the way, on Amazon, if you like a physical copy, we have the, of course, this copy plus hardback also. And we have an audio also, which is if you're driving, you could get that one, or Kindle edition is there. And Spanish speaking, 41% of the, people in America are going to be knowing Spanish, by the way. And still, I don't know what percentage is now, but the new terms are 41%. So we have this book in Spanish also available on Amazon.
That's awesome.
That's awesome. Very generous. Thank you.
Well, Vinney, I appreciate you being on the show, and we'll put that in the show notes, the access to link to that book. And Vinney, there's so much more. We could have done another hour interview. So much we could learn. I'll come
back again. You just call me,
right.
Yes, we can talk about entrepreneur attitude and their enthusiasm, how everybody's an entrepreneur, really. And how to really run the business correctly, we need to communicate right, and the corporate culture and everything, and how the vision and attitude work together, how to realign ourselves in the morning with Miracle Morning. I could kind of discuss some of the books. I mean, I just believe in so many great books.
Yep, that's
And I'm a big proponent of Hal Allrod, and Eckhart Tolle, Power of Now. I mean, all those things have really gotten me to the successes,
That's fantastic. That's good.
all right. Well, great show today, Matt. I'm so glad to have you, Vinney, and we look forward to seeing you again. All right.
Thanks,
you so
Vinney. I
much.
appreciate it,
God
buddy. This
bless
was
you.
awesome.
Yes, thank you so much. Bye-bye. Bye-bye.